Big purchases are a necessary part of life. Whether your goal is to purchase your dream home, upgrade your car, start a business, money is just an important component in achieving this goal.
Yep.
But how many of us have this large sum of money put down? You know what I mean? But most of us will need that four-letter word to help us: a loan. So join us today while we speak about when is it okay to borrow. I'm Crystal Thorpe.
And I'm Alwyn Thorpe. Join us as we discuss money and marriage. Financial institutions offer a system where we can borrow money for many different purchases, and pay them back over a certain period of time.
Yeah.
But is it always the right thing to do? Should we take out a loan for every purchase?
No.
What are the alternatives? Today we'll be joined by a loans officer to discuss some of these things. We're going to be looking at things like when you should or should not take out a loan. Different type of loans,
Right.
and what to stay away from. What more know? What kind of loans have you guys taken out? Let us know in the comment section. What about you?
Well, my first loan, my first experience with loan would have been SLB, right? I took out a loan in my first and not my first year, my second and my third year at UA, right? And once I got my first job, that was priority. Like, I didn't want to do anything else. I wanted to make sure that I put aside my money every month to pay off that loan, because I used to hear some horror story where there's some stories about SLB actually putting people's face in the paper if they did not pay, and I'm like, this face cannot go in no paper. None at all. So I ensured that that was a priority for me. So I went in and I made my sacrifice, and I said, you know what, this is front and center. This goal is front and center, and I made sure to do that, and I was able to pay it off in good time.
That's good. Good.
So what about you?
My first loan was for Keep Party. Luckily, I was able to, pay back that loan. And right after that, I had to buy a new car engine, so I had to take out a loan for that. And since then, I've gotten loans for nothing. So I people them say, we can get this money. So I'm like, all right, give me it. And I had no reason to take out loans in the past. And yeah, I've had a journey with loans.
So you have been able to, when you used to keep your parties and stuff, you were able to make back your money to pay off the loan?
Most of the time.
Okay, good.
Not all the time, most of the time.
Really?
Yeah, man. I have to work out some of them something.
Okay, well, I guess it pays off, and know that you know what it is and what you do and what you shouldn't do, stuff like that. You know exactly when to not take a loan.
Yeah, man. So to help us to get a better understanding of this topic, we are here with my friend, Monique Ashley, who is a retail loans officer, and she'll be helping us to go deeper into, the aspects of borrowing. So we're going to just jump right into it, Monique.
Sure.
So my first question is, what are some of the reasons for getting a loan?
So some of the main reasons would include large purchases, and this would be like purchasing your home, purchasing a motor vehicle, debt consolidation, when your debt is getting out of hand and you want to kind of rein it in.
Yeah.
You do that, have one loan, one monthly payment, makes it easier to track things like that. Some of the most recent things we've been having are dental loans, for example. So if persons are interested in getting braces or any dental surgeries, then they would take a loan for that. Fertility loans.
All right, so what should people consider before taking out a loan?
First of all, you should consider if you can actually repay the loan.
That's the first thing, but that's not the first thing people think about, right?
So that's not generally what people think about. They say, I'm working, I want a loan. But being able to pay the loan is a very large part of it. Job stability, for example. I know that we would have just experienced COVID, and a lot of us who thought that would not, would continue working.
Yeah.
We would have had cut back on our hours, for example, shortening our pay. So, those are little things that we can think about.
Okay.
And another thing is, if I actually do need this loan, is it something I can actually save for, or do I need to borrow for it?
Right.
Okay. All right, so that's definitely a good point, because into my next question, what do you think are some of the mistakes people make when borrowing money, and how could they avoid it?
So some of the mistakes is think that you need to borrow for every single thing. There are things that it's easier to save for, things that you can actually put equity in. So that makes it easier. You borrow less, you pay less, that kind of thing. Not tracking. So when you actually do get the loan, it may be salary deducted. So you're like, oh, I don't have to track my payments. But there are times when the salary deductions don't get over on time. You end up paying late fees and that kind of thing.
Right. So question, how is a person's suitability for a loan assessed?
All right, so when lending, we generally look at the 5 C's. And everybody knows, it's something that is thrown around a lot. So we look at the person's character, and that would include credit history, for example, their capacity to repay, so job stability, debt service ratio. We look at collateral.
Right.
So if it's an unsecured loan versus a secured loan, the different conditions. So the collateral capacity and things like that can influence the condition, and the condition is usually how long you get to repay, what the interest rates are like, if it's a fixed, variable rate, that kind of thing. And the next one is capital. So if you're actually putting equity into the loan.
Okay. So like a down payment.
Like a down payment for the house, a down payment on the car, for example.
Okay, makes sense. What are some of the downsides you would say of taking out a loan?
Well, some of the downsides would be the added interest. So for example, you will take a loan and you borrow $6 million, you end up paying $9 million.
Okay.
So you're paying an additional $3 million on that $6 million.
Okay. Any other?
If you take too many loans and then you have an important loan that you actually need to take out, your debt service ratio can be affected.
Get you.
So,
that makes
So
sense.
what are some of the benefits? Because I know you want to show the benefits.
well, the benefits is that you get the money to get what you want immediately. So there are things that we can't save for, and as much as we try to save for them, we do need assistance in getting them. It builds credit.
Yeah.
Having no credit is maybe as bad as having bad credit. So, having a loan, paying it back on time will build your credit. Makes it easier for you to do the larger borrowing at a later time.
But the question, actually, do we do that in Jamaica? Because I know that abroad they actually look at your credit report or your credit. What is it called again?
Your credit reports.
Right.
Yes. So yes, we do have 2 bureaus in Jamaica. We have CRIF and Credit Info. And when you're borrowing, we do pull the reports.
Okay.
And water bill is now being recorded on it for those who don't like to pay NWC. So we do look at it, and how we assess in Jamaica is very quite different from the US. So in the US, the more cars you have, the more loans you have out, the higher your credit is. In Jamaica now, when brought against your salary, if you have too many loans, too many cards open, for example, then it gives you a lower score. Missing payments will affect that score as well.
Get you.
Okay.
Yeah.
All right. So what's the difference between secured and unsecured, and how does that affect, how your loan is being assessed or processed?
All right. So unsecured loans are loans without collateral. So it's generally personal loans.
Right.
You don't have anything for the bank to quote unquote take back should it go wrong. So usually those have higher interest rates. You generally get a shorter repayment time, and you get lower amounts to borrow.
Okay.
For secured loans, we usually take vehicles for collateral as well as properties, and those you get lower interest rates and longer periods to repay.
Okay.
When you have collateral, it's easier to get a loan.
Okay. Is it better to borrow from one place, or should people borrow from multiple places?
Yes and no. If you're borrowing from one institution, so you have a really good relationship with that institution, there are benefits to be had. So for example, we'll be quicker to give you lower fees. If we are able to negotiate on the rate, then you'll have that benefit of having that membership with us.
Right.
However, sometimes you need to explore what your options are. So not because you've been with an institution and they're offering you the best, maybe somebody else out there can give you something else. But having it all in one makes repayment easier. It makes it easier to track.
Right.
Okay.
Understand.
Makes sense. All right. So when we look at the unsecured versus the secured, which one do you think is better?
It depends on the purpose. So for example, if you want to do home renovations and you have a property and that property have equity, depending on the extent of the renovations, it may be better to use the equity from the property. If you want a loan for vacation, for example, I would not advise you putting up your property
Definitely
for
not.
that sort of reason.
Yeah.
Right.
So an unsecured loan may work in your favor that way.
So guys, if you want to go to Dubai,
No.
Not the property.
don't put on your house.
No, it's definitely not. It's a no. Okay.
All right.
So thank you so much for dropping in and sharing your expertise with us. And when we're borrowing and what we should do and what we should not do. I mean, don't you think it was really insightful?
Yeah, man. It was. I learned something.
Yeah, I definitely learned something. So guys, if you want to know more about borrowing and what it is, some questions. If you have any questions at all,
Or if you want to borrow money.
If you want to borrow money, yes. Look at the screen and you'll see her details. You can reach out to her from there.
Or so you can link Monique for any of your loan needs.
Yeah.
She can definitely help you. Share the link.
Yes.
Now, to conclude today's episode, we've put together a list of things that we need to consider before taking out a loan. First question that you need to ask yourself is, do I meet the requirements for a loan?
All right, and the next one is, what do I need the loan for? That is very important. How much do I need?
Yeah.
Right.
And what are the terms of the loan? Is it a 1-2 year payback? Is it 5, 10, 15, 30 years?
Yes.
How long are you going to take to pay back?
And you need to ask yourself, how do I plan to pay it off?
Yeah,
That's
man.
a big question.
Yeah, where is that money coming from? Is the financial institution reputable and reliable? Is this the place to take my loan?
Definitely. Right. You also need to assess all the costs associated with this loan.
Yeah, man. Processing fees can be one of those hidden stuff that you don't know about until you take the loan.
Exactly.
Ask about those stuff.
Definitely.
So guys, if you found this video useful, if you found value in this, please like up the video.
Definitely.
Like it. Comment and let us know the type of loans that you've taken out in the past and what you guys think about loans. Do you think it's a good thing? Do you think it's evil? Let us know. Alright, don't forget to subscribe to this channel. Subscribe.
Remember guys, to turn on your notification bell so you can never miss a video.
So until next time.
Bye.